Hi, good morning, and welcome to today's edition of Market Analysis Pre-Market for today, the Wednesday, the 21st, September the 21st. I'm Giovanni Betancourt, operator and trader with Vantage Markets. Even though it is Fed Day, Vladimir Putin is still trying to overshadow that institution. In the midst of the conflict in Ukraine, the Russian president issued a nuclear warning to the West and ordered 300,000 reserve soldiers to mobilize. Investors face a number of problems as a result of Putin's intervention. Oil prices, which were lowered Tuesday ahead of the expected bumper Fed rate hike, were pulled into the opposite direction after Putin's speech, rising close to 3% as supply fears came back into focus. It wasn't the only asset class facing a fork in the road early today. Gold, which dipped to near 2.5 year lows, were back on the rise as investors reacquainted themselves with the safe haven asset. It was a similar story for bonds as Treasury yields slipped after a sustained move higher. It is a clear picture for U.S. stocks, which, perhaps for geographical reasons, appeared unmoved. For equities outside Europe, the Fed is a far bigger deal. For the US dollar, there was really one path, on one that took the currency higher still. The Fed's aggressive rate hike strategy and escalating tensions in Europe worked in tandem to push the dollar to 20-year highs. Although central bank week isn't as well known as Shark Week, it is beginning to feel something similar as traders start to sense some blood in the water. In the upcoming days, 10 central banks from across the world will decide on interest rates. But for now, all eyes are on the Fed. The Federal Reserve's third disproportionate rate hike is an unprecedented action. However, enormous inflation necessitates extraordinary action. The scorching consumer price index report for August crushed expectations that the Fed will soon scale back its aggressive stance. And in light of the fact that inflation is still 8.3% higher than it was a year ago, Jerome Powell has reaffirmed his commitment to bringing down prices. Powell will need to strive to avert a mistake similar to Volcker's in the 1980s that caused the economy to enter a recession. Powell has to see strong evidence of the inflation rate decreasing if he is to be more predictable than Volcker. Rates must be in a constrained range and remain there for a while in order to do this. Although some anticipated that markets won't react too sharply to a 75 basis point hike because it has already been substantially included into prices, the possibility of additional big moves could put pressure on stocks in order to stabilize prices without sending the economy into a blown recession. Powell must strike a delicate balance. There are many different opinions on what will be required to control inflation, while former Treasury Secretary Larry Summers says, don't be surprised if the Fed increases interest rates above 5%. Other dovish observers may believe that the Fed just needs another 100 basis points before it can change course. It may still be early, but looking ahead to the November meeting, there's a risk that the Fed will choose to make a lesser 50 basis point adjustment due to the weak housing market. Markets now predict that there will be another 75 basis point increase in November, but we believe that there will only be a 50 basis point increase. Our projection is heavily influenced by the dire status of the housing market. One surprise has already been processed by the markets. Another one will make for a spectacular day. So with that being said, let's take a look at what the markets could be doing today. Again, let's take a look at my lines here. The red one is my support, the blue one is my pivot, and obviously the green one is my resistance. Now, let's take a look at how is it that I come about getting my pivot point. I obtained the pivot point by looking at either Friday's close, okay? I take Friday's close and I add the high, the low, and the close and divide it by 3. This is my typical price. This is the typical price for the market. And I use that for my pivot. Now, why do I say Friday? Because obviously I use that for Friday, for Monday. Now, you can change it every other day. So let's say for Tuesday, you can use Mondays. And for Wednesday, you can use Tuesdays. And Thursday, you can use Wednesdays, and so forth and so on. That's up to you. I just use Fridays and keep that, unless obviously the market is way above or way below it. But in this instance, right now in the Nasdaq, I have used the Friday's numbers to obtain my pivot, and so therefore you can see that in this 30-minute chart how the market has fluctuated above my pivot. Now, this fluctuation of so many candles is telling me that the market is looking to hold itself right around these levels. Okay, so if we obtain later on today some more information or some indicament that the Fed is going to actually rise to 100 basis points, then we might see that the market could probably come in, break our pivot point, which is as a support, and come down to my support or even lower. Other stance could be that the market could just stand here and continue this lateral movement, consolidation movement, horizontal movement, however you want to call it. Or the third occasion will be that the markets will actually come out of this range and do a breakout, and that breakout will take us up at least to initially your target will be 12,000 psychological level, and from there on, obviously, different targets that you can set yourself, right? I just use 12,150. Why do I use 12,150? It's a psychological round number, psychological number for me. Okay, so it's my preference. So that will be the same for the other assets, for the other indices. In this case, for the S&P 500, the market has been fluctuating below my pivot point. But you see how close it fluctuates towards it. So the market is below it, the pivot point acts as a magnet. So market will come to it. The market is above it, it should come down to it. So the same scenario will apply for the S&P 500 as well as for the Dow. Okay, so the same scenario we could see a continuation to the upside, 31,000, 31,100, in the Dow. That could happen. Now let's take a look at crude oil. Here in crude oil, the market yesterday fluctuated below my pivot point towards my level of support, and you can see how well that support held. From here, the market received that news about Mr. Putin, warning to the West, nuclear warning to the West, and so it kind of gave a pop for crude oil to the upside. Now, right now, the market is looking to fluctuate around my pivot point. Today, we have obviously also the inventory numbers, so that should come out, and when that comes out, we'll see more volatility. Now, the consensus will be that there was less production in the States for crude oil. Obviously, this could be bad for supply as the demand comes up again to the forefront because of Vladimir Putin's warning to the West. So could we see another leg to the upside? That could probably happen. 87 will be 87.27, but I've used 87 as my round number, psychological number. So you could probably see that movement to the upside on crude oil when we have the inventories later on today. Now here's Nat Gas. Nat Gas is also just fluctuating right above my pivot point. I am going to actually update my support, and I'm going to use this red candle low, because in this view, okay, this is my lowest point that I've seen back as of yesterday, from yesterday's low. Okay, so from here I'm using that low as my support, and then obviously I have my pivot as my second support because the market is above it. Then I have my resistance right at 8.27. Could we see another movement to the upside? Market could probably do a retracement, pull back a bit down to my pivot point, and then from here we could find support, buyers, and then take another attempt at a higher move. Here we have gold. So gold, in this essence, I am going to also update my support, and I'm going to use this low right here, or yesterday, as my support. Okay, and then I'm going to leave my pivot point as where it's at. Another attempt to the upside could probably be seen if we continue to hear more rhetoric of nuclear war from Mr. Putin. Then we have silver. Silver has made a nice run to the upside. $20 is the goal that I'm seeing on silver. Initially, my resistance is 1980, so we could probably come see and test that initially. Then we have copper. Copper was also just really fluctuating right across my pivot point. From my pivot point, we broke down. Okay, so now market found some support and went back up to the pivot point. It found resistance at the pivot point, and it turned back down. So I am going to actually also update my support right around here. Okay, and the consensus for copper will be that it's looking for another leg up. All right, then we have Bitcoin. Bitcoin really has always been its own mind. But as the Nasdaq fluctuates higher, Bitcoin will fluctuate higher. Nasdaq fluctuates lower, Bitcoin will fluctuate lower as well. So for the Bitcoin, I'm looking at it to come back up to my pivot point. If the Nasdaq obviously helps it out, then we have the euro. Euro is really in a tear, trading below parity. It's trying to sustain itself around this dollar 0.99 cents per dollar. But let's see what happens. If the euro will sustain itself right here, I have my support at 0.98. All right, so let's update our levels for the dollar index. I'm using this high, and I'm going to use 109.50 as my support on. Yeah, 109.50. You know what? No, I'm going to use 110 as my support. Okay, right around there. All right, so here are the fluctuations for today, our levels. Have a fantastic day, and I will see you tomorrow. Thank you.